Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news risk premiums keep on rising. But first, the OECD is reporting that the global expansion is leaking away, and quite quickly now. Economic activity rose by just 0.1% in the first quarter of 2025, significantly down from a 0.5% rise in the prior quarter. The US and Japan were the main drags in their data. And they say this is a departure from the high and relatively stable growth rates recorded in the OECD area over the past 2 years. US initial jobless claims eased lower marginally, all accounted for by seasonal factors. There are now 1.79 million people on these benefits, 103,000 more than the same time last year. Existing home sales in the US fell 0.5% in April to their lowest in 7 months, and notably below what was expected. High mortgage rates are getting the blame. And the first of the US PMI surveys is out for May, the S&P market one, and that reported output growth improved in the month, but prices spiked higher from the tariff impacts. And this was true for both the factory category and their services category. It is better than a decline, but in a broader historical perspective, this isn't very impressive. Supporting that was the Chicago Fed's National Activity Index, which not only recorded a decline in April, but March was revised lower too. Meanwhile, the Kansas City Fed factory survey for May slipped more negative again, even if hopes for the future remain positive. We don't usually report the results of the US Treasury inflation-protected securities, but today's 10-year event reveals the rising risk premiums investors are demanding, even as background inflation rises. Today's event delivered a median yield of 2.14% plus inflation, compared to the prior equivalent event a month ago of just 1.86% plus inflation. These premiums are on the move wider and are likely to widen substantially if Trump's 2025 budget gets through Congress. North of the border, and in a bit of a surprise, Canadian producer prices slipped in April to be just 2% higher than a year ago. It turns out that many components for Canadian factories are sourced from the US, and the falling US dollar has made them cheaper. That is certainly true for energy products, but true for many other components as well. Cheaper input costs will help Canadian factories push back against the tariff taxes their US customers have to pay. In Japan, they booked record high machinery orders in March, up 8.4% from a year ago and far above what was anticipated. The outlook for the next 3 months looks good too, but we should note these gains are built on fast-rising domestic orders. Export order contributions were weak. Meanwhile, the Japanese May PMIs both slipped lower to be essentially flat, a marginal contraction for factories, a marginal expansion for services. In China, and in a sign of how broken their real estate development sector has become, local authorities are using bond funds to buy back unused land from struggling developers as a way to stop them completely collapsing. And Singapore reported its change in economic activity for March, and that came in with a 3.9% growth, lower than the 5% growth in the December quarter, but better than the expected 3.6% rise. But officials there downgraded their full 2025 expectations, saying they'll be lucky to get 2% growth this full calendar year, for all the obvious reasons. And the Indian PMI for May stayed little changed with a robust expansion, but they too are now noting rising price pressures. The flash Australia PMIs for May report a growth stall for both their factory sector and their services sector. That was because they had their slowest growth in new orders in 2025 so far. Global container freight rates stayed low last week, up just 2% from the prior week to be 28% lower than year-ago levels. And bulk freight rates rose 5% from a week ago, but remain in the general low range they've been since early April. The US Treasury 10-year yield is now at 4.55% and down 5 basis points from yesterday at this time. And the price of gold will start today at $3,294 an ounce, down $18 from yesterday. And oil prices are 50 cents softer at just under $61 a barrel in the US, while the international Brent price is under $64.50 a barrel. And the Kiwi dollar is now at 59 US cents, down 0.5 cent from yesterday. Against the Aussie, we're down 30 basis points at 92 Australian cents. Against the euro, we're down 10 basis points to 52.4 euro cents. That all means our trade-weighted index starts today still just under 67.4 and down a net 20 basis points from yesterday. And the Bitcoin price starts today at $111,542 and up 5% from yesterday. Volatility over the past 24 hours has been moderate though, at just on plus or minus 2.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.